Thank you for joining us for today's webinar on conquering beverage alcohol compliance challenges. This webinar is sponsored by Avalara. They breathe compliance so that you don't have to. And we have two of their experts with us here today to go over some of the most common challenges and of course the solutions for wineries shipping direct to consumer. So before we start, let me just remind you that this presentation is pre-recorded, but both Sarah and Shannon are with us here live today in the chat. So if you have any questions, just put your questions right in the live chat and they will answer them as we go along. Now, without further ado, I'm gonna kick it over to Shannon to get started.
Great, thank you, Kim. So we're gonna start today by meeting us. We're gonna introduce ourselves to you, and then we're gonna cover those three common compliance challenges that we see all the time for our customers. And we're going to talk through some solutions for those challenges. Resources are available in the video description as well as in the chat. So go ahead and look for those links there. My name is Shannon. I'm a tax research analyst here at Avalara. I used to work in the returns department, filing the returns, paying the taxes, working the notices, all that good stuff. But my current role is to keep up with changing laws and rules and regulations, different state requirements, things like that, so that our customers can be as compliant as they can be, and we can stay on top of everything we need to do for them.
Thanks, Shannon. Hi, everyone. I'm Faria, Director of our Tax Compliance Services at Avalara. I came to Avalara 11 years ago from the public accounting industry, where I really developed my love for customer experience as well as a drive for accuracy, which is necessary in this world. I live in Sacramento, California, where I love to take full advantage of the vast differences in landscapes, exploring the mountains to the beaches on a regular basis with my husband and 4 wild children. All right, well, let's get started. So at Avalara, we're all about tax compliance. We do the hard stuff so you don't have to. In fact, we are so passionate about simplifying tax compliance that our motto is simply tax compliance done right. Especially in beverage alcohol industry that is so regulated, license and registration requirements as well as filing requirements, et cetera, are complex and constantly changing. Our #1 priority is making sure that your license, registration, and filing requirements are processed accurately and timely so that you don't have to worry about it. And you can do what you do best, which is run your business. I'm going to pass it back over to Shannon to really kick us off.
So we're going to start by a quick overview of some common challenges that we see every single day. The first of which is that interstate shipping rules are ridiculously complex, and of course they vary from state to state. So we're going to go through what that looks like and how we handle it. Then we're going to talk through some age verification and how that has become increasingly difficult, especially in recent years. And then we're going to cover some jurisdiction tax rate and rules and how they vary drastically from state to state. So first, let's cover complex interstate shipping rules. So some context here, we're specifically talking about interstate shipping. So this is a winery in California wanting to ship directly to a consumer, say in Chicago, Illinois. Not so much the intrastate, which would be a California winery to a California consumer. So that's some important context here. And we're really going to focus on direct-to-consumer wine shipping today. So keep that in mind as we discuss this. So what do you need to do to be a licensed, legally abiding DTC shipper here in the United States? There's a few considerations you need to make if you're going to want to be shipping directly to consumers in the US. One of them is that you're going to need to use a common carrier. This is FedEx or UPS. USPS is not a common carrier for alcohol. They're not allowed to ship alcohol. So typically you're going to want to ship through FedEx or UPS. Another important consideration is making sure you have the right licenses, whether it be your home state license or your direct-to-consumer shipping license, wherever you're looking to ship, you really need to make sure you have the appropriate licensing, and that looks different in every state. Similarly, if you are licensed to ship somewhere or you are allowed to ship, chances are you're going to have to pay taxes, whether it be sales tax or excise tax or something else. It's important to know which taxes you need to pay on your direct-to-consumer shipments. So what does direct-to-consumer shipping look like now in the US? It's pretty strictly regulated. I will say for wine, it is more broadly available than for beer and spirits. For wine, about 48 out of the 50 plus the District of Columbia permit direct-to-consumer wine shipments. 3 of those states only allow on-site shipments, while the rest do in fact allow off-site shipments. So what is an on-site shipment versus an off-site shipment? On-site shipping is when the customer is on the licensed premises at the winery, placing the order face-to-face with you, right? They are maybe at your tasting room, they really enjoyed your Merlot or your Pinot or whatever it may be. And they say, you know, I'd really like to get a case of this shipped back to me in Arkansas. They can't necessarily, you know, sign up for a wine club and then have future orders shipped to them. No, it has to be that order that they're placing that day at the winery that can then be shipped back to them. They have to be on the licensed premises. And so Arkansas, Delaware, and Rhode Island are 3 states that really only allow on-site shipping, whether it's through a state law or a federal provision. So it's important to understand what shipping looks like in those states so you're not breaking the law. Arkansas is kind of unique out of those 3 states in that it has an actual direct-to-consumer shipping license and taxes associated with those shipments. So even if they're on your licensed premises and they're having wine shipped back to them in Arkansas, you're still going to need a license to do that. Offsite shipping is where it's the opposite, right? It's the customer is not on the licensed premises when they're placing the order. So this is phone orders, website orders, maybe wine clubs, things like that, where they're at home and they're saying, you know, I'd really like to get a case of Chardonnay for Christmas or something like that. And they get it shipped to their door. That is off-site shipping. And typically there's taxes associated with that. You're going to need a license, all of that stuff. It can be very, very complex and it varies vastly from state to state. So I'm going to hand it over to Sarah for a solution for these complexities.
Awesome. Thanks, Shannon. So here are some solutions to that challenge, and not to state the obvious, but you need to maintain your licenses at the federal and state levels. Seems simple, but I assure you it is not. Shannon already touched on it a bit. We're going to go into a little bit more detail. So here are the entities that you work with to do this. First and foremost, the Federal Alcohol and Tobacco Tax and Trade Bureau before you do anything else. Next, you'll need a license to operate in your state. It gives you the ability to produce, which varies, and it also varies from state to state on what permissions it actually gives you. That's something you're going to hear frequently throughout this presentation is everything varies state to state. Some states it's just for production, other states it can offer various transaction permissions, and you'll do this through your operating state alcohol beverage and control agency, aka ABC. Next up, each state you'll plan on transacting in, you'll need to work with the state alcohol beverage control agency, again, in that state to get licensed as well. In addition to ABC, each state will have their own state Department of Revenue with their very own unique license and registration requirements. All that to say, due to the varying requirements in each state, it can be very confusing, frustrating, and cumbersome. This is where Avalara can help with a long list of requirements and organization that is needed to more efficiently and rapidly get licensed and registered to sell in your desired jurisdictions so you can get to the fun stuff. To top things off, just to add a little extra flavor, every state has their own renewal requirements as well. So you're not just done once you're licensed. You have to maintain and renew on time. If not, the state may revoke your right to sell into that state immediately, and you can get fined or taken to court if you're caught shipping without a license. So it's serious stuff. And highly regulated is the key. So on this slide, next up, direct-to-consumer shipping compliance. Best practice number 2, staying on top of federal and state tax requirements. But here we're really going to focus on the state tax requirements. This is actually my favorite part, filing tax returns. I've led sales tax filing teams for over 10 years. And let me tell you, it's never been boring or mundane because each jurisdiction has such different rules and regulations and complexity. And if I could scream this from the mountaintop, they are ever changing. So they keep us on our toes. For example, you see sales tax. Seems simple enough, yet the sales tax rates are always changing and very different across all jurisdictions. Some states have flat state rates, others have local rates in addition to the state rate, depending on where the sale is made in the state. And not every state even has sales tax, such as Oregon and Montana. Direct shippers are required to pay sales tax in many states, regardless of nexus status in the state. That's one piece to the puzzle. Then you have markup tax. Consumers pay a specific percentage based on the retail value of the alcohol sales. And then the sellers must file this on a separate return. We see these sometimes instead of a sales tax, and sometimes in addition to sales tax. Oftentimes it's higher than the standard sales tax rate. Typically we see this on DTC or retail sales. Just for a couple examples, New Hampshire, which doesn't have a sales tax rate or sales tax, they have the markup tax. In Kansas, you pay liquor enforcement tax instead of sales tax. And in Wyoming, you pay both. So lots of complexity there. Next up, we have excise tax, which is a big one. Shippers are charged by the unit instead, if you think about a gallon by volume, the cost is factored in the price of the goods sold. Shipment type could be wholesale, direct, self-distributor, or combined. And the return details could actually include invoice data, volume data, etc. And the rate may be based on alcohol type, content, annual production volume, and shipment volume. Not listed on the screen, but also important, I just wanted to mention shipment reports. Most jurisdictions require them for wholesale sales, but they also may be required for direct-to-consumer sales in certain jurisdictions. So these reports can be tedious and time-consuming and require very detailed information about the purchaser and the recipient. Not to go into too much detail, but you can tell I love the filing piece of the requirements. But to top it all off, in addition to all of the different requirements in each state, the alcohol industry adds a complexity to just simply sales tax returns for a lot of other industries. In addition to multiple filing requirements in each state, every return could have a different filing frequency, which may or may not be based on sales thresholds, which is difficult to track, and different due dates throughout the month as well. Some returns even have different filing and payment dates. In addition, many returns are required to be filed electronically, which requires maintaining all of that information for each different jurisdiction, while others are available to file as paper still, if it weren't time-consuming and complex to track enough. Like I said, never a dull moment in the world of tax compliance in the beverage alcohol industry. I will now turn it back over to Shannon to discuss the second challenge.
Yeah, so as I briefly mentioned earlier, age verification is something that we have seen become more and more complex and cumbersome in the recent years. So what is age verification? There's a few different considerations here. Sellers, first and foremost, sellers are responsible in all states to which they are shipping to verify the age of their customer, recipient. Anybody who is purchasing or taking possession of alcohol must be at least 21 years of age or older. It is the responsibility of the seller. So even if, maybe they provide you with a fake ID or somebody doesn't check ID at one point, it is your responsibility as the seller to ensure that all of your customers are at least 21 years of age or older. And states take this very, very seriously. It can vary anywhere from a fine per transaction to losing your license to even a felony. So it's really important that you are checking ID, that you're ensuring that everybody is at least 21 years of age if they are transacting with you. Some states even require a third-party age verification provider or a stored copy of a government issued ID. They can get very specific with this as well, and we're going to talk through that a little bit more here in a bit. Other states require the purchaser's date of birth be collected at time of sale, and then in some cases reported back to the states. Sarah was just talking about shipment reports and excise returns. Oftentimes these require invoice data, invoice number, recipient name and address, things like that. And in some cases, they will actually also require the recipient and purchaser's date of birth be provided as well. So you may think, oh, I just need to collect it. Nobody's going to ask for it. Well, they very well might. So it's important data to keep on hand. Let's talk through some solutions, some processes that we talk about for age verification here in the US. So the very first step is something we call age affirmation. So I'm sure we've all visited a winery website or the website of maybe your local liquor store or whatever it may be. And the very first thing you see when you go to that website is a box that asks, are you 21 years of age or older? Or some variation of that question, right? And it's going to have a yes box and it's going to have a no box. If you check the no box, you're not going to have access to that website. It's just as simple as that. If you check yes, you're saying, yep, I am at least 21 years of age. I am allowed to look at this website. Let's go forward. There's obviously some issues with that where anybody could click yes. So this is why it's just a first step. There are some states that actually require this, which is why most sellers will have this box on their website. The next I was just talking about was date of birth collection. So this is something that is done at the point of sale. So whenever they are ordering online or in your tasting room or wherever it may be, you should collect that date of birth and store it securely. So that's something to consider as well, because as I mentioned, you might have to report it back. So make sure you're keeping that information on hand. The next step would be age verification. We're going to dive deeper into that here in a minute. But as I mentioned, there are some states that are requiring either a third-party service or collection of a copy of a government-issued ID. And then the final step, which we'll also dive a little deeper into, is carrier inspection ID. So let's dive a little bit deeper into age verification of purchaser. As I mentioned, there's two ways you can kind of do this. The first of which would be collecting a copy of the customer's ID. This is obviously far easier to do in a face-to-face transaction. So if somebody is visiting your winery, your tasting room, they want to take that that case of Merlot back with them. You're going to ask for ID. You may go into the back, make a copy of it, store it in your files, or you scan it into one of your files on your computer. Pretty easy to do when they are there. If somebody is ordering online, however, or over the phone, collecting that information and that copy of that ID can be far more difficult. They may have to email it to you, which is not a secure way to do it, or fax it to you, which is more secure, but it's pretty cumbersome. And a lot of people don't have fax anymore. Or there's a variety of ways that they could send it to you, but most of them are not particularly secure, and most people don't really want to have to do that. So another option, which is pretty attractive for people that do a lot of their DTC business remotely, online, over the phone, etc., is a state-approved online verification service. Avalara actually has one. We have a service for that. And what these online verification or these third-party verification services do is they check a variety of data points for your customer: name, date of birth, maybe an address, different public records, things like that, to make sure that your customer is who they say they are, and they are at least 21 years of age. So they're not just looking at an ID and saying, all right, they're good. They're looking at all of these different public records to make sure that the person is who they say they are and they are the age that they say they are. So obviously that's a little more accurate, right? Anybody can provide you with a fake ID. It happens all the time in college town. So going through a process like this is really protecting yourself from some risk. An additional risk mitigation is the security of it. These are pretty secure systems. You're not having to worry about emailing personally identifying information with your address and your social security number and all of that information. It's all contained in this service. So, the storage of this is more secure. The transaction itself is more secure. It does cost a little bit extra. It's a certain amount per check or per transaction, depending on the service. So it does cost a little bit more, but you're really mitigating your risk and making sure that you're probably not going to be liable for selling to a person that is under the age of 21. So those are, really important considerations if you're thinking about working with a third-party age verification service. There's also states like South Dakota. We had mentioned that some require a third-party service or a collection of a copy of your ID. South Dakota is one of those states. And they are very, very specific as to what a third-party approved age verification service is and how it works and all of that stuff. And if you are not using one of those or collecting ID at the time of the transaction and you are caught, it could be up to $10,000 per transaction, which is huge. That's a lot of money, especially if you're doing this repeatedly, right? And it could end up you could lose your license, and nobody wants to do that. So that's just one example of a state that is getting very specific. We've had other states that maybe aren't as specific, like Massachusetts, but they're saying, hey, if you're caught shipping to a minor or selling to a minor, you could lose your license, you could have substantial fees and or be taken to court. So these are things that you really need to consider if you're wanting to look into an age verification process. So the final step of this whole age verification process, right? We had the age affirmation, collection of date of birth, and then the actual age verification or ID collection is the carrier ID inspection. So FedEx or UPS is going to bring the package to your door as a customer, and they're not going to just leave it there. They can't legally just leave it on your doorstep, which is probably good for the quality of the wine too, especially during the summer. But mostly it's to make sure that the recipient is there and verify who they are. So they have to make sure you're there and somebody over the age of 21 is there receiving the package. Next, they're going to check your ID and make sure you are who you say you are and that the date of birth on that identification makes you at least 21 years of age, right? They're going to check all of these data points. They're going to make sure that you are who you say you are, you're at least 21. And then they're going to have you sign to say, yes, I have received the package. It is now in my possession. I am at least 21 years of age. And we went through this whole process and we're good to go. UPS, FedEx, whoever it is, will know to do this. One, it's in their system, but two, these packages are actually required to say something in most cases about check ID, signature required, contains alcohol, something like that to notify whoever is carrying that package that, yeah, somebody needs to sign for this because it contains a nice bottle of wine or what have you. These are really important considerations. Make sure your customers are at least 21. Make sure your packages are labeled correctly and that you are abiding by your state's age verification laws or whatever state you're shipping to. And then, FedEx and UPS are pretty darn good about making sure they get the right signature. So now I'm going to hand it over to Sarah to discuss tax rates and rules and how they vary by jurisdiction.
Awesome. Thank you, Shannon. Back to my favorite topic. So we started to touch on the complexity of these varying tax rates and rules earlier when we discussed some of the tax filing requirements. But this dives a little deeper, shows some more examples into the complexity of these varying tax rates and rules. You can see based on these 3 state examples on the screen, it's nearly next to impossible for a business to track and calculate manually. For example, all 3 states have an excise tax, Oregon does not even have a sales tax. So one of the very few that don't have a sales tax. Texas and Washington also have that local sales tax requirement in addition to the state sales tax, depending on the destination of the delivery. So that's where the destination address really comes in handy. In addition, Washington charges an additional special litter tax on direct-to-consumer sales. So you can see from this small sample, I mean, just the variation in the gallonage and the amount excise tax charges in the states, all of it is very complex and nearly impossible for a business to really track on their own. So really automating and using a third party is super helpful in this world. And I promise we did not use the most complex states to demonstrate this. We chose a small sample, and they just get even wildly the variance just keeps getting broader as you look at more and more states. So what is the solution to this challenge? One of the solutions is the SST program, Streamlined Sales Tax Agreement. It's been around for wineries, breweries, and distilleries since about 2021. The SST program's been around a lot longer than that, but since direct-to-consumer became much more popular in the recent years, they've opened it up to this industry as well. There are 24 states that are members, and under the SST agreement, any business may register to receive an array of standard benefits that includes simplified registration, sounds like a dream, and more uniform rules and regulations. Businesses that qualify as volunteer sellers can actually obtain additional benefits, which include sales tax calculation and reporting services from a CSP, which is a certified service provider, like Avalara, at no cost. I repeat that, at no cost. A couple other benefits are audit defense, and like I said, that streamlined sales tax registration process overall is a heavy lift just for these 24 states. There's still other states that are not part of this program that you would still file in the regular sales tax realm, but 24 of the 48 states, that's pretty big. And as a reminder, the sales tax return is only one piece of the puzzle. But if you talk about that lift of some of that, I mean, audit defense is huge. And I know a lot of our customers actually utilize that and love that benefit from it. If you have any additional questions about SST, we have some really great information. So please don't hesitate to reach out. And, this is just one of the many benefits and many solutions to that problem, varying tax rates. The calculation is really number one. So we've outlined some of the challenges and solutions here. Hopefully you find them helpful. And like I said, please reach out for clarification or any additional information that we weren't able to get to today. So lastly, moving on to just kind of sum everything up. In summary, one of the best ways to really reduce compliance pains for all three challenges that we discussed today, as well as really overall, is to stay in good standing with all level authorities. First and foremost, a good way to do this is through automating compliance. Get that burden off of your business. Here, and you can see here, there are ways to just go from end to end, even through Avalara. So first, our licensing and registrations team can help you get compliant and ready to ship. Shipping verification for beverage alcohol helps determine if a transaction is compliant with origin and destination rules at the time of purchase, including license requirements, dry areas, age validation, volume limits, household, and shipment. Built into AvaTax is age verification, which Shannon touched on, uses a customer's age by using identification records to confirm legal drinking age. It's also available as an add-on to the AvaTax Beverage Alcohol Suite. AvaTax for beverage alcohol really simplifies multi-tax calculation by assessing regulatory requirements and tax types in multiple jurisdictions while providing one central location for storing all of that beverage alcohol tax compliance information. Like I said, once you are licensed and ready to legally ship with all of these other components in place, AvaTax calculation will calculate the correct sales and excise taxes in all applicable jurisdictions across the country. And finally, if you recall, my favorite part of the life cycle is filing the tax returns. The bottom line is Avotax really helps businesses navigate these complex tax challenges in general. So all that to say, thank you for listening to us compliance tax nerds today. We have several resources we'll be sharing in the chat, and we'd love for you to reach out with any additional questions along the way. We'll share those resources in the link. So just want to thank you for joining us today.
Thank you very much.